Okay, so students, how are you? How are you? We are going to start. We are going to start life cycle costing. Life cycle costing, our chapter that was based on the concept that we have to calculate the entire cost of the life and complete selling price of the life. And if our average cost per unit is less and average selling price is more than that average cost per unit, just go for that product and sell that. So let us calculate first. Question: the company has produced the following information for a product it is about to launch. The product is expected to have the 5 year life of the 3 years. Okay, 3 years life, expected sales units, all the costs are given here, all the costs. They are asking you to calculate life cycle cost per unit. That's very simple. Just what you have to do is to calculate the total cost. Okay, if you see, some costs are already total, like fixed production cost, they have given you in total. And these costs they have given you in total. And some costs are in per unit, like variable production cost per unit and variable selling cost per unit. First, we'll calculate the total cost for these given in per unit. So 2.3 per unit into 2000 units, just calculate 2.3 into 2000, it's 4600. It's 4600. And 0.5 into 200, 2000, sorry, 2000, it's 1000. Okay, it's 1.8 into 500, 5000. 1.8 into 5000, it's 9000. Why we are calculating total? So that we can add all of them at once. 5000 to 0.4, it's 2000. After that, 7000 into 1.2, it's 8400. And 7000 into 0.4, it's 2800. Okay, now we get all the total cost. Now add entire all the cost from here to here, complete cost. Never ignore any cost you are given in the question in life cycle costing. 4600 plus 9000 plus 8400 plus 3000 plus 3500 plus 4000 plus 1000 plus 2000 plus 2800 plus 1500 plus 1600 plus 1600 plus 700 plus 700 plus 700. It's 45. Total cost is 45,100 that the product will obviously incur over its life, complete life, 3 years. Okay, divided by the units, 7,295,14,000 are the units. Just divide the total cost over total units. It's 3.22. 3.22. Answer is life cycle cost per unit is 3.22. So what you have to do, take all the cost, divide by all the units in the product, in the like life. Okay, now another question. A manufacturing company which produces a range of product has developed a budget for life cycle of the new product P. The information is in the following table, relates exclusively to the product P. Life cycle, lifetime total, and some per unit costs are given. Like if you see design cost given in total, that's manufacturing cost given in per unit, then two costs given the total, then machine hours. These are machine hours. If we'll need that, we'll use that. Okay. Company's total fixed cost are budgeted to be 72 million each year, and total machine hours are budgeted to be 96 million. The company absorb overheads on machine hours basis. Okay, there is some technicality, one technical point in this question. One technical point in this One technical point in this question is given, but no issue. We'll do it. We have to calculate life cycle cost per unit. Okay, we know the units 300,000. We know the units 300,000. Let's do first complete these costs that are given. Okay, so total cost I'll write first 800,000 plus this is 20 per unit and total units are 300,000. So 300,000 into 20 will be 6 million, six zeros after 6 plus 500,000 plus 20,000. These are the costs till this in this box. The costs are given. I have added all of them. Just there are some overheads as well. Overheads they have given you that it's 72 million. 72 million each year. It's 72 million each year. Okay, what we can do? It is like what we can do is they have not told us the complete life. Had the life cycle, life of the product not given. Mm-hmm. Okay, let's continue. 72 million divided by 96 million. Basically, what the game is, actually they have not given you the OAR of complete life. Okay, we'll calculate per unit. OAR means overheads of overheads per unit. What we can do, ignoring first this overhead, I'll do it at the end. Calculate overhead per unit, and I'll add in the life cycle cost per unit. But first, what we'll do, just take this total cost other than this overhead. I'll calculate that in after this cost per unit without overheads. Okay, and the number of units were 300,000. Number of units were 300,000. Let's calculate it first. So 6,800,000, 500,000, 20,000. It's 732. Above divided by 300,000. 300,000. It's 24.4. It's 24.4. It's 24.4. But it's 24.4. Ignoring overhead, we have not done any calculation for overheads. Now I'm doing the overhead calculation for overheads. Why? I'll confirm why I've done it separately. But first, I'll taken all these upward cost and calculate the cost per unit, life cycle cost per unit. Now what I will do for this overheads, he has told you that it's 72 million. Why I have not added this 72 million here first to calculate cost per unit? Because it's written 72 million each year. And second issue was it's not given that for how many years. It was not given that for how many years the product was there. Is there written 2 years, 3 years, 4 years? Life cycle is given. Time period no, not given. So that's why I can't add this 72 in it, because these are complete life cost, because it's written lifetime total cost, and it's 72 million is per year cost. Now, what you will do, you can't calculate the total life cost. That's why I have not added here. I'll do it separately and I will directly calculate per unit cost. How? Because they have given that 72 million each year, the cost was incurred according to 96 million hours. What you will do? First, you will calculate OAR. From F2 concept, MA concept, we know what is OAR. What you have to do, OAR is budgeted overheads above $72 million divided by it's according to 96 million hours. 96 million hours. From here, we will calculate, you can calculate OAR. 72 divided by 96 is 0.75 per hour. Dollar 0.75 per hour. Okay, now we come to know that overheads, how much overheads was incurring total in 1 year? 72 million. But in that year, 96 million hours were being used. So accordingly, when I've calculated per hour overhead cost, it was 0.75. Means when there was 1 hour gone, 0.75 of overhead has been incurred. I've calculated that. Now I know that for 1 hour, how much overhead we get incurring? 0.75. If we are given with the value that how many hours one unit take, that is written here, that machine hours that one unit take is it's 4 hours, because it's hours given, not dollars. So he has told you that 4 hours one unit is taking. Okay, if 4 hours one unit is taking, so what you will do, it's per hour, multiply 4 hours one unit is taking. So you can calculate overheads per unit as well. Overheads per unit as well. Okay, so 0.75 into 4, it's 3. You come to know from here that overhead is 3 per unit according to the life cycle. But obviously, we can't calculate directly from here because total cost was not given for overhead. Per year was given. So we have calculated per unit overhead. And what just will add this 3 here, and answer will be 27.4. 27.4. C will be the answer. 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 Okay, it was technical. This point was technical. Just pause the video and try to do it once by yourself. Just pause the video. Don't see the solution. Try to do yourself. That either you are able to do that or not. It's very important to self practice, right? Okay. Now There's another question. SNT is a Japanese electronics giant specializing in production of game consoles. SNT is planning to introduce the latest next generation console and the ranges of gaming in the summer of 2000. Development of new consoles is due to commence on 1st January 2000, sorry, and SNT is currently working out at what price the new console should be sold then. Okay, the new console is expected to incur the following cost in the 4 years, and it will be like the cost they have given you, all of the cost they have given. Okay, market research has indicated the customer will prepare to pay average price of 420 per console. Okay, market research says that 420 per console is will be the proper selling price, but SNT CEO believes this will not be sufficient to make the production worthwhile. Basically, the CEO says that 420 is not sufficient. Okay, which of the following statements made by a CEO are true regarding the cost? Okay, let's see which of the following is true. Let's see which of the following is true. Wait, wait, oh, wait. Okay, okay. So what you have to do is, like, first of all, they have told that cost per console calculated using life cycle costing is higher than the price customers are prepared to pay. Okay, this is the selling price. We have to calculate the life cycle cost per unit. Why we have to calculate? Because CEO statement was that cost per console is more than life cycle cost. So if you are not having any life cycle cost per unit, so you have to calculate it. So how you will calculate? Very easy, very easy. Just add all of the cost. What was the, like, it's not like difficult, it's not difficult. Just add all of the cost divided by units. Okay, R&D cost 950. Okay, we'll add, then these marketing cost is in total. These three costs, if you see, sorry, these two costs, these two, and these two. They are per unit, per unit. Okay, we'll calculate it. We'll calculate it. Just calculate it in total. Total means like 450 plus 30 is 480, and just 480 multiply 10,000 units. So 480, I'm just calculating it at once. 480 multiply 10,000. It's 480, four zeros, like 4.8 million, 4.8 million. Okay, 430 plus 30, 460 into 12,000. It's 5.52 million, like 552, and then tetra zero. Now 290 plus 40, 330 multiply 11, 100. It's 3663000, and 290 plus 45 multiply 3000. It's 1005000. I have just calculated the total cost, taking cost per units, adding them, and just multiplying with the units. Now I'm going to calculate like the sum of all the cost. All the cost means first cost is this 950, right? 950,000. Okay, plus under marketing cost 230,000, plus 120,000, plus 20,000, plus 5,000. Okay, now that cost we have calculated in total 4.8 million. Okay, plus 552 tetra zero, plus 3663000, plus 1005,000. Okay. Now the last cost, end of life cost, this is 125,000 as well, because I have told you add all of the cost. When I have added all of the cost, it's like 16438,000 divided by how many consoles you have made? 10,000, 12, 11, 100, 3,000. Okay, 10,000 plus 12,000 plus 11, 100 plus 3,000. It's 36,100 consoles we have made. So just 16438,000 divided by 36100, it's 455. When I have calculated 455.34 almost dollars per console, when I have added all of the cost and divided by units, I come to know the cost was 455. But market research says that sell it for 420. So this statement of CEO was correct. This statement of CEO was correct. That cost was higher than the life cycle cost was higher than the the selling price. Basically, the customers are prepared to pay. Okay. Okay, now second point is on more attention to R&D cost and to could reduce warranty cost in later years. Basically, the CEO is saying that if you are giving more attention on the R&D, means research and development cost, if you are incurring a lot of cost, this can reduce your warranty cost. Because if you see, there is a warranty cost here. Warranty cost is basically, what is warranty? Sometimes you take the product and it's there are the technical issues, and you take back to the market, to the shop, and you say that that according to warranty, this product is not working working good. So you will replace that, or obviously you can a warranty claim means that they will repair it for you, they will give a new product to you, or you refund to you, like that type of thing. So all the warranty costs, the manager is the CEO is saying that if you are focusing on development more, it can reduce your warranty cost. See, if at the research and development phase, you are focusing on the product, focusing on the quality, focusing on the thing that you know that it can be damaged, or it will affect the customer and they will claim the warranty from you. So obviously, if you are incurring more cost at that point, research and development point, so that you can reduce the warranty cost, so it's possible. So it's written that attention on R&D, like research and development, focusing on quality more, focusing on the value more. So it can reduce. Basically, they're not written that much must reduce, but it can reduce warranty cost in later years. Obviously, your warranty cost can be decreased. More warranty claims will not be, obviously, you will not face more warranty claims if you are focusing on research and development more. So this statement is also correct. So both 1 and 2, both are correct options. Both are correct options. Okay, next is 49. Next is 49. Okay, 49. They are saying you that which while the drag and drop of, okay, but they're asking which four are the following are said to be benefits. Basically, we have to tell the benefits. We have to tell the benefits. Okay, it provides the true financial cost of product. Yes, yes, because when you are calculating proper life cycle cost per unit, so it gives you true picture that average cost is this, because at the start year always the cost is more, but it gives you true picture, true financial cost. Okay, the length of life cycle can be shortened. The length of life cycle can be shortened. It's not the benefit. Everyone wants the life cycle length of life cycle increase. So shortened is not a benefit. Expensive errors can be avoided in potentially failing product. Potentially failing product can be avoided. Yes, in that potentially, right. Obviously, if you are focusing on complete life cycle, so you can avoid the expensive errors. Why? Because obviously, if you know that this is not the good product, this will fail, and you are focusing on complete life, and you know at that point it can fail, and it will create a huge loss for us. So obviously at that point you can, at the start point, you can ignore to make that product, you can avoid that error. That's a benefit. Okay, then lower cost can be achieved earlier by designing out cost. Yes, as I've seen that designing out cost, basically at start level, if you are like focusing on the designing cost, so obviously at that point you can like lower down the cost, sorry. And after that, it's written better selling price can be set. Yes, if you know the proper average, you can set the better selling price. Yes. Decline stage of life cycle can be avoided. No, no, and it's not the benefit. So there are four benefits. It provides a true financial cost, expensive errors can be avoided, lower cost can be achieved, and better selling price can be set. The length of life cycle can be shortened, not a benefit. Decline stage can be avoided, it's not the benefit. Okay, after that, next, which of the following statements are true regarding the justification of useful use of life cycle costing? Okay, we have to tell the true statement. We have to tell the true statement. We have to tell the true statement regarding that. Okay, number one, product life cycle are becoming increasingly short. This means the initial costs are increasingly important component in the product overall cost. Yes, if any product has short life cycle, so it is very important to see the initial cost. For example, I know that my product life cycle is just 3 years, and I have incurred a lot of cost at first year. So it is difficult for me to cover up all the cost, or like cover up all the cost to the selling price fastly. On the other hand, if I have a 10 years life cycle product, I know that over the time I will reduce the cost so much, and I'll earn the profit. So for the short life cycle product, initial cost obviously are increasing the important components, increasing of initial cost basically. Like initial cost is basically important component for the product overall cost, because you have to focus that at the start the costs are more. I know research and development, marketing and all that, but you have to control that as well to earn the profit. So this statement is correct. Okay. Product costs are increasingly weighted to the start of product life cycle, and to properly understand the profitability of the product, these costs must be matched to the ultimate revenues. Yes, lifecycle costing, obviously this is true, that product cost is basically more at the start, and to properly understand the profitability whether you will earn or not, you can use lifecycle costing. That's it. It's basically definition of lifecycle cost, that at the start that there is more cost, the weightage of cost at start is more increase, basically more. So what you have to do, for if you want to understand the profitability, just calculate life cycle cost, like see ultimate entire revenue, entire revenue of life, entire cost of life, you will understand the profitability more better. So two is okay. High cost research, design and marketing early stage in the product life cycle necessitate high initial selling price. They're saying that if there is a high cost at the start, more cost at the start, so set higher initial selling price. No, you are new to the market, and if you are like like setting the selling price more so that you can cover up the cost, no one will take from the product from you. There are competitors who are selling at 100, and you know that at the start our cost is 150 per unit and selling at 180. So who will take that? The product that is being sold at 100, you are selling at 180, no one will take. This is not the true point. Traditional capital budgeting techniques do not attempt to minimize the cost or maximize the revenues over product lifecycle. Yes, traditional capital budgeting means, like before lifecycle costing, traditionally what we were doing, we're not focusing on over the life cost or revenues. We're just focusing on the cost of this year, and we want to earn the profit. Accordingly, we set the selling price. But now lifecycle costing says that don't always focus on complete life cycle, calculate average cost. If it's less and you're selling for more than that today, and average life cycle cost per unit is less, you will earn the profit at the end. At the end of the period, your pockets will be full. Your pockets will be full, right? So 1, 2, and 4, these three are correct statement. Which of the following statements are true regarding life cycle costing? Again, there are some these type of questions, like theoretical questions, very important, very important. Life cycle costing takes into account all costs incurred in the product life cycle with the exception of sunk cost incurred on research and development. Oh, ho, 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 ho. No, no. Basically, he's saying that with the exception, that he's saying that ignore sunk cost. Sunk cost means past cost that has been incurred on research and development. No, we have to add that as well. Every cost we will add. So this is not the point. Wrong. Lifecycle costing ensures the profit is generated over lifecycle. Yes, lifecycle costing basically ensure that, basically the concept is this, that if you are having the average cost less and selling price more, you will earn the profit. So they ensure that you earn the profit. And they obviously say, lifecycle costing say that if you are like not earning the profit, leave that. So it's basically it's ensuring that earn profit. Lifecycle costing is most useful for product with an even weighting cost over their life. They're saying that lifecycle costing is more best for the product which have even weighting. Even weighting means at start $10 cost, second year, third year. If evenly costs are divided over the year, life cycle costing is of no need, because life cycle costing are for the product in which at the start, for example, there was a cost was 150, next year 100, then 40, then 30, where the weightings are not even. Weightings mean weightage, at start more, there's more cost and then less. So life cycle costing basically appears for that type of product in which the costs are very much higher at start, and over the time it gets lower. So life cycle costing says calculate the average cost. If it's already even, like 10, 10, 10, and same, almost the same cost over the life, then no need of life cycle costing, because already you are having the even weightings, right? So it is also wrong. So 2 only is the answer. Okay, company B is about to start and developing a new product for launch of its existing in its existing market. They have a forecast of 20,000 units. Marketing department suggests a selling price of 43. Marketing department says that sell for 43. Company seeks the markup of 40% product cost. It is estimated that lifecycle costing will be as follows: design and development 43,000, manufacturing 15, and plant and decommissioning 30,000. What is the lifecycle cost per unit? Mm-mm-mm. Very simple. Very simple. See, you have the selling price of 43, right? You have selling price of 43. 3. But you don't need selling price. Just calculate the cost per unit. Just calculate the cost. You have the cost, design cost 43,000 plus manufacturing cost 15 multiplied 20,000 units. 15 multiplied 20,000, it will be 300,000 plus another cost 30,000. So all costs you have added, all costs you have added. You don't need to take the selling price. All costs you have added. This is like 43,000 plus 300,000 plus 30,000. It's 373,000. It's 373,000 divided by number of units 20,000. Divided by number of units 20,000. It's 18.65. 18.65. Just you have taken all the cost and just divided by the unit. Why I have ignored this profit margin and selling price? No need of that. No need of that. Bro, listen. No need of the selling price. We are not focused doing the question of target costing in which we deduct the selling price and all the target cost here. He's not asking for the cost gap or like target cost. He's asking life cycle cost per unit. That was another topic. So he's just given you for confusion in the question. In life cycle costing, selling price is ignorable. Just at side you have to put. You have to focus on the cost, complete cost divided by complete units, just cost per unit. You have calculated 18.665 is the answer. Here we are done with life cycle questions. We'll meet you in the next class. Till then, take care, guys. Allah Hafiz. Bye.